Hey everyone, and welcome to another video. Everything surrounding currencies is a hot topic these days, so some of you will have heard of the dollar milkshake theory. It is a theory about the dollar that is really coming to an extreme right now, and in this video I will take you through the story and tell you why this is relevant to crypto and also your portfolio. But before we continue, make sure to hit that like button and subscribe to this YouTube channel if you do enjoy the content. And as you might know, we have removed the paywall on our trade letter. The trade letter is completely free, where you get the latest information about crypto, trading and investing 3 times per week. All you need to do is check the link in the description beneath. Remember that the 8 Global Macroeconomics Bootcamp Part 2 is approaching. Stay tuned to the channel if you want to be there. Back to the video. The dollar is the wrecking ball of the economy, and I will tell you why that is the case. In a world with America or the US as the superpower, you get the dollar as the global reserve currency. You can therefore say that the US dollar is the bedrock for the financial system. Today, for once, we are not going to talk about the valuation of the dollar, but about the actual relationship between the dollar and all the other currencies that we have on the planet. In a world where, because of the dollar liquidity crisis, global trade is now more than 80% in dollars, the availability, cost and price level can have a huge impact on how the economy performs. Each of these variables can have an incredible impact on the operation of these economies and thus provide opportunities for investment. Most important of all is the rate of change in the price of the dollar, especially if it changes rapidly, as you can see in the image behind me. If that is the case, we have a problem for the rest of the world. I talk about it very often, but there is such an incredible amount of money being printed that currency devaluation is becoming more and more prevalent. So too in the US, where about 40% of all dollars in circulation were printed during the last pandemic. People think that so many dollars are being printed that the world will soon be swimming in dollar liquidity. A guarantee of the dollar going bust, would you say? Well, that is certainly true. The other countries are also printing lots of money in similar values of their own currencies. This runs roughly parallel to each other. But there's one incredibly big difference, and that is demand. Remember, the global financial system is built on and around the dollar. Despite the fact that they don't want it, if you need something, you really have almost no choice to use the dollar. Where other countries are drastically trying to reduce the interest in dollars, this is going to take a long time. And the longer this takes, the greater the risks of sovereign debt crisis becomes. For example, if different countries trade with each other, then this trade is paid for in dollars. Think of buying commodities or food or goods, for example. Everyone needs dollars for transactions, money reserves and dollar-denominated debts, as we have that too. The US is actually happy with this. They own the system where the banks benefit, serving as gatekeepers of the dollar system. So the US benefits extremely from the use of the actual dollar that they have themselves. Other countries are losing out on this. The more people there are who have demand for this dollar, the more the demand of the dollar will go up and thus push the price up. It is even so bad that the global demand for dollars is so great that there is not enough supply, which we call the dollar liquidity crisis. So this is why you have not seen inflation in the US go as extremely high as it is in the other parts of the world, despite the fact that there is an extreme amount of money being created. But the real danger arises only when the other economies start to weaken or when the US starts to grow in relation to the rest of the world, in which phase we are now as inflation is in Europe going through the roof. If there is less economic activity in the rest of the world, there will be fewer dollars in circulation. A scarcity, in other words. We know it from Bitcoin. This is terrible for countries that are already struggling economically because in addition to their own problems, you still have to do your trading in the increasingly expensive dollar, and also take into account your debts are also in dollars. Now you get your negative feedback loop, and that's what we call the dollar milkshake. Scarcity causes the dollar to become more expensive relative to the rest of the currencies, so local economies have to print more money and then convert it into dollars to trade again. As a result, their own currency weakens against the dollar becomes relatively stronger, and you are stuck in an endless feedback loop of strength increase of that actual US dollar. A huge strain on the global system. And so you get into a global bond and currency crisis very quickly, and that is exactly what we have been dealing with in recent months as well, with the fall of pension funds in Great Britain because of the huge rise in long-term yields, which have been running at several 100% in a year. In the end phase, as with crypto, you will see a blow-off top, a huge increase in the destruction of the world's economy. So it makes sense that people will eventually move away from the dollar standard. The dollar is not coming to an end because of extreme weakness, but rather because of extreme strength as we see it right now. Back to now. We are in this phase where we see that the global lack of dollar liquidity around the world is already causing bond markets to topple and yields to go out of the roof. There's virtually no real hedge against this phenomenon, as all other currencies are weaker than the dollar and thus more likely to topple out too. Unless you're talking about a scarce, technology-bound new monetary system, Bitcoin. I hope this video has clarified why the dollar is so important to the world economy. The further we go into cycle, the fewer dollars we have, the greater the dependency, and thus the price goes up of the US dollar. As the price of the dollar rises, the economy gets worse and there is less room left for alternative investments, for instance risk-on assets like Bitcoin. To the breaking point, which has formed this year as the weakest link, the pension funds and households are about to collapse. In the coming videos I will keep you updated on this situation, as we always do on this YouTube channel. For now, thanks for watching, don't forget to leave a like, don't do anything stupid, and I'll see you again soon.